Canadians are struggling to build sustainable income, but with these 3 strategies, we can help them reach their goals. Why might it be risky for income investors to allocate too much of their portfolio to traditional income investments like government and investment-grade bonds? Well, there are at least 2 reasons. The first is yield. Today, the average 10-year Government of Canada bond has a yield of about 2.3%. Subtract taxes and inflation, and you could actually be losing buying power each year. The second is loss on investment. Interest rates and bond prices tend to move in opposite directions. Interest rates are currently at record lows, but if they rise, bond investors could experience a loss on their principal investment. So, what's the solution? At Sun Life Global Investments, we design income portfolios with an intelligent mix of conventional government and investment-grade bonds, along with alternatives like high-yield and emerging market bonds, and even equities, to help investors build sustainable income. Why would income investors want exposure to infrastructure? Well, there are a couple of reasons. Let us use a hydro plant as an example. Hydro plants are typically governed by long-term contracts that stipulate how much electricity they will deliver and at what price. This does 2 things. 1, it creates a predictable stream of cash flow to the publicly traded company that owns the plant. This cash flow doesn't fluctuate much even in volatile markets, since people still use power for their day-to-day needs. And 2, since these contracts generally allow the price of electricity to rise over time to keep in line with increases in the cost of living, the cash flow rises along with it. Exposure to infrastructure offers unique investment characteristics, and that's the essence of how diversification works. At Sun Life Global Investments, we design income portfolios with diversified exposure to traditional fixed income and dividend-paying equity investments, as well as indirect exposure to non-traditional investments like real estate and infrastructure to help build sustainable income. What should an investor look for in an actively managed portfolio? At Sun Life Global Investments, we feel there are 3 key traits. The first is strategic asset allocation. That means a portfolio management team that uses forward-looking views of the world to determine how much to invest in each region and asset class. Next is a multi-manager approach. It's practically impossible for a single money manager to be an expert at everything. So it makes sense to hire multiple money managers who have expertise in the asset classes included in the portfolio. Finally, we believe open architecture and rigorous oversight are important. This means a portfolio that hires money managers from a truly global talent pool and follows a disciplined process to hold them accountable for their results. At Sun Life Global Investments, we design strategic portfolios that are managed by carefully researched and selected money managers from around the world to help investors build sustainable income. Let's share these strategies with investors. Together, we can fix income.